words and code don't really protect you from hypersonic missiles, and they don't make sure the grid has enough capacity to charge your electric vehicle or stop a rolling blackout. So matter really matters. Again, basically what that means is...
In Homer's epics, heroes don't just face battles. They navigate tricky straits, hidden reefs, and siren songs. Homer, the ancient Greek poet behind the Iliad and the Odyssey, uses these poems to explore how individuals face uncertain futures and uncertain journeys. And investing in 2026 can feel an awful lot like that. I'm Gemma Cairns-Smith, Investment Specialist at Ruffer, and this afternoon I'm joined by Alex Chartres, who's a fund manager here, and he wrote in his 2026 Ruffer Review article, Iliads and Odysseys, about how we're moving into a new, more multipolar world and what that means for investors. Alex, thank you so much for joining me today. I really enjoyed reading your piece in the Ruffer Review, but like Homer, some might say it's definitely an epic. So for the benefit of our readers, what do you really think is the key takeaway from your piece and what you hope people take away?
This is the latest chapter about the breakdown of one era and the emergence of a new one, and how investors might think about navigating the challenges that come with that.
So you framed today's world through the Iliad and the Odyssey. Why did you pick those stories to help you explain the regime change the markets are going through right now?
You can barely open a newspaper these days without reading about some strategic Achilles heel or other. Thinking about supply chains, for example, rare earths in the case of the United States, or Trojan horses. Think about Operation Spiderweb, that the Ukrainians used shipping containers holding drones to attack Russian airfields deep in the Federation. So I went back to the original material, and there are a lot of interesting echoes for modern investors. Other than the Achilles heels and the Trojan horses, of course, the Iliad itself is a particularly violent episode in the breakdown of one system. It's in the middle of the Trojan War, and after that system has folded, Odysseus, who is responsible for coming up with the Trojan horse idea, at least that's according to Greek tradition, he goes on a 10-year journey navigating effectively the aftermath of this breakdown. And there are a lot of interesting stories from that resonate for us, including strikingly modern things like Hephaestus's proto-robots, the golden tripods that ply the halls of Mount Olympus and so on. So lots of interesting food for thought.
And you said in your piece that we live in epic times. What today and about markets in 2026 feels the most epic to you at the moment?
Well, you're rather younger than I am, Gemma, but we both grew up largely in what many people would describe as a post-meaning era. And we were told that the great questions of human political economy had been settled. We lived in a rules-based system. If you knew the rules of the game, it was relatively straightforward. And now, of course, people realize that the age of empires never really left us. We're in a new industrial revolution. We're in the middle of Reformation and counter-Reformation, a scientific revolution, an age of discovery. I could go on. So I would say all of those things are, in a values-neutral sense, pretty epic.
And another epic theme that you touch on within your piece is the breakdown of Pax Americana, which you say has meaningfully accelerated. What in particular over the last 12 to 24 months, for instance, has really accelerated and marked that shift?
Any number of examples, but let's take a few. We're in 2026, Venezuela saw a decapitation operation earlier this year, which was, if only in terms of a demonstration of America's extraordinary military prowess, remarkable. We had the huge spat with European powers over Greenland, which Mr. Trump would like to add to the United States. There are all sorts of examples where America as a reliable ally and a provider of security to the global commons are now greatly in question. And so lots of US allies are reconsidering at speed the reliance they've put on Washington. And as a result, I think you're going to find people hedging their bets. There are lots of forms that will take, up to and including some countries considering their own nuclear deterrence, because if you're sitting in Tokyo or Seoul or any number of European capitals, do you really believe any longer, if you ever did, that the United States will risk Los Angeles or New York in a nuclear exchange to keep you safe under its umbrella? I'm not sure you would.
And so you said that clearly we're moving into a period of regime change and a more volatile world. How can investors make sure that portfolios are prepared for that? What are the types of assets and the types of opportunities that you can see in markets?
I think the opportunities are going to be a lot more varied than they have been in the post-Great Financial Crisis period to date, when there's basically been one trade in town, and that's US equities and US tech platforms in particular. We're talking about a run-it-hot world where the authorities are keen to get nominal GDP up, to say nothing of real GDP. And that means unlocking all sorts of industries, including asset-heavy industries that have been neglected for a long time. It means massive investment in electrification to get the grid up to speed for modern industries. It means rearmament. It means a massive push on robotics and automation amidst the general demographic collapse. So there are a huge number of growth opportunities, but I think you're going to need to be more active than was the case in the last period. The flip side of all of that, also thinking about portfolio balance, is that the traditional offsets for portfolios are likely to be less reliable. If the world is more shock prone and inflation prone, bonds are not likely to be reliably negatively correlated with stocks, so bonds won't be a particularly good hedge much of the time. The dollar is likely to be less reliable as well. That means thinking about commodities, active use of cash, derivatives, and so on, to make sure you're really building an all-weather portfolio.
And in your article, you refer to the term matter matters. What do you mean by that? I mean, I think you've touched a lot of it in your previous answer, but it'd be good if you could expand on that. And maybe also within that, you could touch on your current thoughts on gold. Clearly, it's rallied a lot. Is it a beneficiary of this new regime? What's your current thinking there?
Yeah, in a just-in-time world, the end of history, hyper-globalized world, people haven't worried too much about constraints. And so asset-heavy businesses that actually produce stuff in the real world have been out of favor versus asset-light platform models, as I touched on a moment ago. But words and code don't really protect you from hypersonic missiles, and they don't make sure the grid has enough capacity to charge your electric vehicle or stop a rolling blackout. So matter really matters again. And basically what that means is you're going to need a lot of investment in a lot of areas that have been underinvested for a whole generation. And there are enormous opportunities that are going to last a long time in those spaces.
And then gold, could you just touch on that?
All of the things that have supported gold's run over the last year or two remain intact. Clearly, it's less asymmetric than it was at the start of that extraordinary run. What are we talking about? We're talking about massive debt and fiscal stress on sovereign balance sheets. We're talking about dollar debasement concerns. We're talking about inflation risk, geopolitical fragmentation. They are all still in the mix. Because it's less asymmetric, we've taken a lot of profits from what we own in the funds. We've still got enough, so if it continues, as we expect over the long run, we should benefit. But it is the hardest of hard assets, and I think there are a lot of people looking at it and seeing it's got quite unique properties for the era we're talking about.
And just to play devil's advocate for a moment now here, is there a development or something that could happen in markets that you think actually could undermine perhaps some of the things that you said in your article, or actually could challenge some of this regime change that we're seeing right before our eyes?
Well, there are plenty of things that could challenge the regime change thesis, but the point of the article, really, the Odyssean mindset, is to acknowledge that there are many different futures possible. And one has to be flexible as an investor in accommodating those different futures and looking for the signs as different paths unfold. In terms of the specific regime change thesis, two things stand out. The first would be if there was a kind of domino effect of the revisionist states. If you suddenly found that China and Russia, maybe Iran in real time, end up with more pro-Western governments, then suddenly all of the Pax Americanas over much more decisively multipolar chat will subside a bit. Much of it will remain, by the way, because there's basic economic maths. Global leveling up means that America doesn't have the preponderance of power it once did, and that's a pretty permanent shift, I think. The other thing would be a massive increase in real GDP growth. And that would do a lot to address, number one, the huge debt problem we have, but number two, a lot of the political problems that come from operating in a financially constrained political environment.
Thank you. And then if I may, just one final question from me. Other than regime change, because that one's been taken, what do you think is the Achilles heel of markets right now?
See what you've done there, Gemma. That's very good. There are plenty of candidates. And again, with the Odyssean mindset, one would say the key thing is not to try and predict exactly what it is. It's to make sure that your portfolio will do well, whatever it is. But there are a couple that are, I would say, significantly underpriced. Let's leave aside what's happening in the headlines at the moment with the energy shock, agentic disruption, AI going rogue, in other words, getting into infrastructure or financial markets and causing an accident, I would guess is only a matter of time based on the evidence we've seen so far. So that would be one. And the second would be the article concludes with Odysseus's return to Ithaca, where he finds things in a state of disorder, as I mentioned at the top. And I think that the sorts of challenges we're going to see in this era for Western polities will be quite significant, and the chance of serious disorder in one or more advanced economies is probably also underpriced.
Thank you so much. Thanks for joining me today, Alex. Thank you, everybody, for listening at home and for coming with us on the tour of the world as we see it at the moment. If you liked our discussion today, you'll find the link to Alex Chartres' article both on our website but also in the show notes.